I was thinking, how about you guys each introduce yourselves and tell us a bit about the projects that you're working on to start.
Patri, if you want, go first.
Sure. All right. Hey everyone, I'm Patri Friedman. I'm a general partner at Pronomos Capital. We are a venture capital fund that specializes in investing in charter cities or startup societies or special innovation zones or whatever you want to call them. So we invest in teams of founders who are looking to do these unique real estate projects where they get a concession from a government to allow them to rezone land with different laws and institutions that will increase the value of that land as a real estate project. I say this even though it's kind of not the most exciting way to describe it, because as a venture capitalist, my goal is returns. And it's important to understand this like core business model that underlies this whole idea of startup societies or free societies, which is that land that has good laws and good institutions is worth more than land that doesn't. And if we can make a process of rezoning land with better laws and institutions in partnership with a country, and then develop those real estate projects, we can make the land worth make more and make money while making the world better. So that's what we do. And you know, since we're kind of a cross-company group and that we invest in multiple companies and have various ventures, we do a lot of different things. And also because we're new, we're kind of still figuring it out. So that's me. Eric.
Thanks, Patri. So Erick Brimen, founding partner of NeWay Capital and CEO of Próspera. NeWay Capital was started with a similar vision as to what Patri has created, but perhaps 5 years or more too early. In any case, its vision remains to unleash new ways through which to empower entrepreneurs and wealth creators around the world to solve the biggest, most challenging problems profitably and durably. Próspera is the first full stack platform through which to deliver the service of governance in partnership with governments, and upon which charter cities, startup societies, massive industrial parks, special economic zones can be created. All these we refer to as prosperity hubs because they share as commonality the leveraging of world-class governance, some technology, but more importantly, best practices and best in world partners to create the environments for prosperity to emerge.
So my first question is for both of you, and it's when you're looking to invest into a charter city or economic zone type project, what sort of criterion are you guys looking for?
Sure. So I think I'll put it into two pieces. So like a lot of how we think about our business is a combination of like default venture capital viewpoint and then what's special to charter cities. So the first thing that we look for is a dedicated team of full-time founders who are very passionate and highly competent, ideally who have some experience with startups, with real estate, and have some ties to the community in which they're looking to build, and have traction. And you know what traction means in the startup society world, because you know these are big projects that it's not easy to persuade a government to approve something. And so like getting to actually having an approved zone that's built out, that's you know a multi-year process that's way far ahead. So what we're looking for is at sort of what we call the pre-seed stage, is just a little bit of traction, some interest from a government, from potential tenants. That's the earliest stage, and we're working on an accelerator program right now to do a few of these pre-stage projects. Then at the seed stage, where companies are raising, say, $1 million, maybe a valuation of 5 to 15 million, we look for significant traction, like an MOU with a government, an MOU from a strong anchor tenant, or otherwise proof of aggregated demand. So, you know, if you're focusing on commercial, it could be a tenant. If you're focusing on residential, it could be the people who put down deposits. because they want to live in your community. And then financial traction. So in the sense of it looking like you can raise the money that you need to do this. And then at the Series A stage, which for example is, I'd say, Próspera is kind of in that Series A to Series B stage. That's not our focus, just because we're a small fund. Our check sizes work best in these pre-seed and seed ventures. And we aim to work with later stage financing for later stage projects. But at the Series A, you've kind of got full approval from a government. Maybe you've bought your land, or maybe you have options, and you're actually going to start doing a first concept build. So that Series A is kind of where you build, and then Series B would be like a larger expansion build. Eric, any comments?
Yes, no, I agree. I think those are the right focus areas. From my perspective, I get particularly excited when the project has a combination of local impact, global relevance, and the legal foundations are solid. And what I mean by that is the most important thing that projects of this nature need to be able to achieve, especially because it is upon us to demonstrate that this is a hell of a lot better of a way to deliver prosperity. Projects to be successful and for the movement to succeed have to purposely seek to have a positive impact in the local communities which surround them and the host governments that have partnered with them. So local positive impact is critical. It's also a good thing to do. And then with regards to global relevance, there's so many types of projects around the world. We're only interested in the types of things that can truly unleash the next wave of innovation, that have the potential to have global impact in the most meaningful of ways. And the third point about strong legal foundations is that without that, it's a great idea, aspirational vision, but the reality is that in the world as it is today, if you're not operating in partnership with governments, seeking to enhance the way in which the stated objective of governments is delivered, which is to create the conditions for people to prosper, and putting aside ideology and focusing more on that versus delivering results, if you don't have that, and it shows up on whether or not you have a strong legal foundation, then it's a think tank project, which is good. It's very important, but it's a different type of project than what I think we prioritize.
So the next question I have is the complete flip side, and it's what are the red flags that would make you not want to invest in a project if it came about? What are the criterion that would be inimical to your investment?
Sure. So one common red flag is projects that are not approved by the country that they're in. So you guys, I've been doing this stuff for 20 years, right? So a lot of people propose projects, and I'm always excited with all the great ideas and creativity out there. And I've certainly thought about ideas for doing secret cities before, or approaches like that, or been excited about, say, regions that were somewhat independent from their country, but not fully recognized. I understand thinking about that, but for me, first off, just even if I set aside my VC hat, I think the goal is to make like large, public, prosperous societies. And you don't do that by being in secret, or by not being approved, or by hoping that no one will notice you, or hoping that they won't intervene. And then even more so with my VC hat on, it's just, I'm not going to risk my investors' money on projects where there's no clear legal title or legal claim. And I know this is one of these places where the practicalities of what it means to actually build new cities can sometimes clash with some of our ideology that people ought to be free to self-determine what they do with bits of land. But the fact is that, in the world as it exists now, countries own land, and countries have respect, and they have guns. And I think that the way to proceed is in partnership with them. So that's a big red flag for me. Another one is when a project doesn't have any particular leader. So this can sometimes happen at the very early stage. A project could be headed by consultants. I'm working with consultants right now on something that's too early stage to get founders. Sometimes the government might commission an economic impact study for a zone. And so at that earliest of stages, but we wouldn't invest. And the project really needs to get to where it has a legal entity and dedicated people working on it. I guess the legal entity is another one. Again, this is not very sexy, but we will not wire you money if you do not have a legal entity. And that legal entity is not demonstrated to be properly incorporated, and our lawyers have not looked over the documents of incorporation. So those things that are pretty standard, but there's a lot, we're flexible on where it is, what the business model is, what the legal system is, what the approach is, all of that. Eric, do you have anything to add?
I agree with those red flags. I'll double down on the point of projects that seek to be born as antagonistic to their neighbors. Sovereign governments is just of no real value in the short term. And, the new way through which to unleash prosperity is not through bloody revolutions or armed conflict or anything like that. So we have to be a lot more astute in this new era, and partnership is the way to go, and not in a naive way. So big carrots and big sticks, which I can get into later as to, the right mix of those. But so antagonistic attitudes, rhetoric, messaging, that's, in my opinion, destined to fail, and in any case doesn't comply with our value system. I would also say, and this from just looking at the number of projects across the globe before I became the CEO of Próspera, I found that most projects that had the potential or have the potential to be of the nature that we're looking at either fell at one side of the spectrum where they're led by developer groups, large-scale real estate developer groups that could in fact build city-scale projects, or on the other extreme, sometimes very idealistic, whether it's based on politics or philosophy, but people and groups that really got and get the importance of the legal systems, the water we swim in, and that these two groups were too distant from each other. So the real estate developers didn't, I think more and more they do, understand the huge impact of the legal system, nor care much to innovate around it, because especially in developing countries, these large real estate developers that can build cities are in one way or another either in cahoots with government or are able to navigate the current legal system quite well and much to their advantage. And they're able to do the 20, 30% IRR, that they're looking for. So they get enough reward for their risk. So, it's good enough for them. Whereas the more thinkers have the right ideas, but zero experience, often at all in business. And if in business, certainly not at the scale of building a city. So one of the red flags that we look for and still anticipate is if they're in any of these two extremes. The challenge and the opportunity, which is why, Próspera was created, was to create a blend, of real world experience in the hard asset infrastructure and the realities of building a multi-layered, multi-facet, sometimes multi-decade long enterprise with the right ideas. And 5 years ago, that didn't exist anywhere in the world in one location. So, Próspera was all about bringing the best in the world that had the pieces together. Many of you on this call, actually, I'm happy to see many faces, whether it's Mark Fraser, certainly Tom Bell. I mean, I could go on, Joe, I could go on, but in any case, you know, the idea of bringing investing world to create in aggregate all the pieces is absolutely critical. I'll go into more details in the breakout session about that, but if you don't have the essential elements in place, or at least identified, if you don't even know, and that's a big red flag.
So I'm now going to start taking audience questions. So if you guys have a question, just type it out in the chat. And we already have our first question from Mark Wilcox, and that is, what non-US jurisdictions are the most compelling for you right now, maybe with a special focus on Africa and elsewhere?
Let's see. Yeah, I don't know that I can say in this larger group what jurisdictions are most compelling. Let me think of what's public. I am really excited about what's been happening with Brazil and charter cities. The fact that last year they added proposed legislation for creating a special administrative zone program that it didn't pass, but it was a really positive sign. And then they invited us out this year. I see some people who went are on this call. And, you know, they're just really interested in exploring this. They're doing a lot of privatization. You know, Brazil has a strong community of freedom-loving people. And it's a top 10 country by population, by landmass, top 10 economy. So, you know, it would be a really big deal. I'd say generally, like, continent-wise, I'm most excited by like Latin America and Africa. You know, I think there's potential in Asia and the Middle East, but the challenge there is that they are the professional city builders, and they tend to build cities at scales like, oh, a small $5 billion city or a large $20 billion city. And it's kind of hard to get somebody building something that big to, you know, incorporate new ideas. And there's certainly no way that we, as a fund that writes, you know, checks in the hundreds of thousands generally to participate. But I think that, you know, Mark Lutter, for example, from the Charter Cities Institute, has been doing some work, and others have, trying to convince those city developers that their cities will be worth more if they incorporate new governance. So I think that's an exciting long shot.
So
yeah, oh, go ahead, Ivo.
Oh, no, I was going to ask you, Eric, if you had anything.
Well, I agree, and here's a shout out to Mark Lutter. I think he's doing a great job as measured by the quality of work that his institute is pumping out. The Institute for Competitive Governance, you know, it's one of my favorite efforts out there, really thinking academically about this. Startup Societies Foundation. So all these groups, and I apologize if I've forgotten any at the moment, but are critical components of the ecosystem. And a lot of them have been focusing in Africa, where the need is great. And so that is promising to me in the long term. We are currently 100% focused in Central America, and I'll go into more details in the breakout session. But let's just say Honduras is extremely exciting.
So we're going to have to go into the breakout session soon, so I'm going to take two more questions. The next question is, there's a whole bunch of these new city projects that are started around the world, and a whole bunch of new charter city and economic zone projects. According to some metrics, there's something like 2,200 economic zones worldwide. However, a lot of these seem like they're ghost towns, and a lot of these end up not having any tenants, no major industries move there. What steps can you take to avoid this from happening to any zones that you start or invest in? And
yeah, I mean, in one of the proposals that we're working on right now, like, part of the government interest in having us like write the proposal and be involved is that if you have, you know, there's certainly downsides to profit motivation, but profit motivated investors versus, say, government funded projects, I think it's less likely to be a ghost town, because the investor, you know, actually cares about creating prosperity and, you know, making something that works economically and bringing in businesses. Some of these projects that China does, for example, You know, the government just like, it goes back to like, they need to read their Jane Jacobs, like just like simply building sidewalks and buildings does not like make the economy of a city manifest. It's like something that you have to nurture organically and like adapt along the way. You have to like find industries that will actually benefit from locating there and bringing them in, and then finding like the next industries that can benefit from that cluster. And, you know, just kind of, it's like tending a garden or something. And so you know, to me, that's the biggest factor is understanding the way that economies grow, not trying to like put industries that don't make sense there, and not subsidizing, making things be profitable. I think that's one of the places where the profit motive shines, is avoiding that.
Yeah, and you know, they're very tangible and not easy, but specific ways to get that, and that starts with getting signed MOUs from anchor tenants. So if you think you got something of value, go convince a company of meaningful size for the overall project and have them sign an MOU. And you know, there are different types of MOU. Some are not worth the weight on paper. You know, they just say we're thinking about maybe being interested if, you know, everything in the world is delivered to me for free, and obviously that's of not of no value. Others are a bit more tangible, but the best type of MOU, and strategically from a negotiating perspective, what we have seen works very well, is when you structure them to be non-binding unless a clear set of deliverables are delivered upon. So you say, okay, you're an anchor tenant because you're going to be a hospital, for instance. And as a hospital, you're going to invest X amount of millions of dollars, and here's the size of your operation. But, you know, this is non-binding unless, you know, there is infrastructure in place, unless somebody builds the building for you and agrees to lease it out, you know, for X amount of years, and unless, you know, there's demonstrated security in place. And so, great, you got that. Non-legally binding makes it easy for the counterpart to sign, but having it be legally binding upon a trigger or a set of triggers means that they're serious. And then you replicate that same format across the other, say, 4 or 5 conditions. You go to the security firm and you say, okay, you know, you are committed to deploying a force of 100 guards, you know, which will require you to invest X amount only if there's a hospital, there's infrastructure, and so you kind of do the same, right? And you do an infrastructure development partner, and they're legally committed, but only if you have a guaranteed tenant, a developer, a security firm. And then before you know it, you got these cross-referenced MOUs that are all kind of committed as long as each of them delivers. And that's where, you know, venture capital and the startup equity comes in, where you figure out which one is the easiest to trigger, and then it's a domino effect. But ultimately, you know, from our experience, that's what seems to work best, to how to structure it. And you're not going to get an MOU of that nature unless you are obviously prioritizing an industry that makes sense for the location, and that's quite locally driven. You know, few industries make sense everywhere and anywhere. You know, maybe sort of digital services or things that can be deployed almost anywhere, but there's still some dependencies like access to talent and, you know, basic infrastructure. So it's very location driven.
So Christopher Albanese asks, is there a preference for greenfield zones, or is there a preference for inhabited areas in your own strategies?
Okay, I have a strong preference for greenfield at this stage, and the reason is both like philosophical and practical. You know, even though the governance that we're talking about here is not something, you know, extremely radical and innovative, it's looking at taking best practices from other countries, simplified business codes. It's still something that's kind of new, and I think it's really important that people be able to opt into it and not be forced in. And to me, a lot of the like now, I could absolutely see, and you know, perhaps with what Eric is doing, where a city succeeds and perhaps the province decides to vote to modify themselves to use that governance system. I can absolutely see that happening. However, I think that we need to wait until that's really strongly being asked for. It's a very strong pull from the population, and where that system had been tested and proven by people who opted into it for a significant period of time. So like, I feel quite strongly about this. I think, if we got pitched and a company in Pronomos that was working in an existing population, I would have to see really, really strong evidence that that existing population like really wanted this and really understood it deeply. And I feel like that's impossible because like most people don't have the expertise to evaluate a set of laws in the abstract. Whereas if it's actually been built in their country and people have opted into it and seen in practice exactly what it's like and how it's working, well, now they can make an informed decision that they want that in more of the country. So I feel pretty strongly about this, but I wouldn't absolutely rule it out right now, but close.
I concur with you, Patri. And from what Próspera is doing, is greenfield site through and through. However, just to be triple safe and aligned to guiding principles, the best practice, I believe, is to go to the nearby communities. And even though they're not part of the special jurisdiction per se, to get their powerful support. So in our marquee project, it's a greenfield site. However, the closest communities were offered a referendum, and they voted with 90% plus approval. Even though it's not affecting them directly, it's a strong proxy, so you're kind of covered on all bases. It's a fully opt-in greenfield site, and the nearby community that stands to only benefit from positive externalities. On top of it all, very powerfully came out and publicly did a referendum in favor. So that would be, it's yes, and if there's a nearby community, make sure that they are powerfully in support. Otherwise, it's just going to come back and bite you in the rear later on.
I think that the point that Erick made about getting the approval of nearby communities that aren't directly inside the zone is absolutely critical, and it's something that a lot of these projects forget. So to end for now, maybe you guys could each quickly give us, maybe even type in the chat, ways that people who are listening to this can find you online. And after that, I'm going to talk a bit about the different breakout sessions that'll be occurring. So Patri, how about you go first?
People, do you mind? I was hoping to answer to a related question, but what I want to say is it'll take me probably 30 seconds. Do you mind?
Sure.
Okay.
Yeah.
So wearing an investor hat, and I think pretty much anybody here will agree with some of this, but I'm sure Patri and others, the world out there currently has different types of investors, and some of them deem themselves to be, say, social impact investors, and they're all about making the world a better place and helping people lift themselves. And they're kind of willing to do that even if it represents a lower return on financial investment. And then you got, financial return driven investors, and whether they're sharks or basically they only make decisions driven by financial ROI with a specialty, but using it to maximize financial ROI, they kind of get a little allergic of the notion of social impact or anything like that, fluffy, hippie, etc. And so this world has been evolving. Like more and more models have found ways to incorporate social impact as compatible with financial returns. But I gotta say, one of the things that excites me the most, I think for the world at large, for the investment community at large, and especially for those who actually care about making the world a better place, but are not willing to sacrifice financial returns because they get more fundamentally that would be a really negative signal. The model of investing into city scale projects that purposely seek to address the governance layer, it is, in my opinion, the absolutely best model out there right now and probably ever will be, where social impact, purposely seeking to lift people up, actually drives financial returns at an exponential level. Because if the business models are structured appropriately, it's the only business model out there that is able to internalize the positive externality of good governance. Everybody agrees that good governance is good. The problem is that the positive externalities are not internalized. So you have the opposite of the issue of negative externalities. Nobody has a for-profit capacity, much less incentive, to spend the money, take the risk, to make good governance happen at scale. Because if you're focused at too little a scale, it's too expensive to try to fix governance. And even if you do, you're not capturing enough of it. So at scale, you can manage to take a small percentage of the overall value and have it be fabulously profitable. So anyways, I just wanted to say that for those of you who either are investors thinking about being or know investors, like we need the biggest, the brightest, and it's okay that they have a heart. In fact, those that do and have lots of money to invest should find this model as the absolute best model out there through which to both make the world a better place and get huge financial returns on investment. One additional peculiarity, especially for those pension funds, big asset managers, there's hardly an asset class out there more compatible with deploying billions of dollars and getting higher than venture capital returns. And I mean significantly higher than venture capital returns. So anyways, thank you, Thibault.